Hello students, hope you are doing good. So the purpose of making this video is to cover the amendments as applicable for June 2023 exams, guys. So this video would be relevant only for those students who have already attended my June 2022 batch of tax and now writing the exams in June 2023. Yes, guys. Chalo, we would be covering it. So the first changes, and I have prepared a material, separate material on this. So whatever are the changes I have highlighted in red color, so that if it is small changes, you can update in your regular study material itself, guys. So let us go through it one by one. Chapter 2.1, that is the first changes, is with respect to basic concepts of income tax. So coming to Finance Act, there is no change in the Finance Act or previous year or assessment year definition, but whatever Finance Act will be applicable for you would be Finance Act 2022 as applicable for previous year 22-23, and the Finance Act 2022 is applicable for your June 23 and December 23 exams, guys. Next, coming to assessment year and previous year, the previous year applicable for your exams, that is June 23 as well as December 23 exams, would be previous year 22-23, and the respective assessment year would be 23-24. Yes, and there is no change in the definitions, just to clarify. Then coming to chapter 2.3, where the tax rates are given for different types of assessee, and here the rates would be as for assessment year 23-24. And normally any calculations for you will be asked in the exam for previous year 22-23 or assessment year 23-24, guys. Yes. So now coming to tax rates applicable for individual. For individual, slab rates are applicable, like up to 2,50,000, it is basic essential limit, the tax rate is nil. Then from 2,50,000 to 5 lakh, 5%, more than 5 lakh up to 10 lakh, 20%, and more than 10 lakh, 30%. Yes, sir. If I am a resident individual aged 60 or more, the basic essential limit would be 3 lakh. If I am a resident individual aged 80 years or more, then the basic essential limit is 5 lakh. And if I have reached at the age of 60 or 80 at any time during the previous year, including the first day of the assessment year. So for us, assessment year is 23-24. Even if I am celebrating my 60th or 80th birthday on 1st April 23, still I will be eligible for a higher basic essential limit of 3 lakh or 5 lakh, guys. Okay. Then coming to the tax rate applicable for domestic company. Domestic company have an options under section 115 BAA and BAB. If they opt for it, then the tax rate will be 22% or 15% respectively. If not, we have to check their aggregate turnover or the turnover in their business in the previous year 2021 to decide what is the tax rate applicable for the domestic company who has not opted for 115 BAA or BAB. We have to check what is the tax rate applicable for 22-23, means we have to check the turnover in 2021. If the turnover of that domestic company is up to 400 crore in 2021, in that case, the tax rate for the previous year 22-23 would be 25%. If not, if the turnover in the year 2021 is more than 400 crore, then the tax rate applicable would be 30% for the previous year 22-23 for that domestic company, guys. Okay. Then they have also covered some basic only about the taxation of virtual digital asset. So taxation of virtual digital asset like cryptocurrency and all is covered in section 115 BBH, which is very similar to casual income, guys. You already know what is casual income, which is taxable at 30%. If you have any winnings from horse race, games and all, it is covered as casual income, and casual income will always be taxable under the other sources. And against casual income, you cannot claim any deductions, you cannot claim any expenditure, you cannot adjust any loss. So even the income from virtual digital asset is very similar to that, which is given in 115 BBH. So what is it? We will see. As per the newly introduced section 115 BBH of the Income Tax Act, the income in respect of transfer of virtual digital asset, that is if you have sold any of this virtual digital asset like cryptocurrencies in the hands of the assessee, shall be taxed at a flat rate of 30% without the benefit of any deductions. You cannot claim any deductions against it except the cost of acquisition or set off of loss. Okay, they are not covered in detail, guys. Now if I am holding any virtual digital asset and if I am selling it, any income which I am earning from that will be taxable at 30%. Means from the sale value, I can reduce the cost of acquisition, but I cannot claim any deduction under Chapter 6A against this income, guys. Now, if I have any loss from the sale of virtual digital asset, that loss can be adjusted only against income from the same name or same source. For example, I have a loss from the sale of virtual digital asset. That loss can be adjusted only against the income from the sale of virtual digital asset, guys. Yeah. Now the question is, sir, under which head it can be taxable? It can be taxable under 3 different heads. If my business itself is buying and selling of virtual digital asset, then whatever is the income, it will be taxable under that PGBP. If I am holding virtual digital asset as a capital asset, then when I transfer it, it will be a capital gains income for me. If I am getting it as a gift, someone else gifted me, then section 56 to 10 pitchins. If the value of that virtual digital asset, which is nothing but movable property, if the value of that is more than 50,000, then for the recipient, it will be taxable under that other sources. As per section 56 to 10, which talks about gift taxation, guys. So if I am receiving any virtual digital asset as a gift whose value is more than 50,000, entire value, that is nothing but fair market value, will be taxable in the hands of recipient. But all this scenario, whatever I explained, where is it taxable and all, actually is not covered for you in your syllabus. So just try to remember the rate, guys. That is important for you. Then coming to the deduction chapter, which is chapter 6. There, section 80 IAC, there the time limit, the company should be incorporated between what date? 1st April 2016 to 31st March 2023. It was actually 2022, but now they have extended it to 1 more year. All other things remain same. Whatever I have violated in red color is the only change. All other things remain same only. But here I have just taken the complete section so that you will have more clarity where to make the correction. So you can make the small corrections in your regular study material itself, guys. Yes. Then coming to chapter 10, which talks about TDS, TCS and provisions of advance tax. There are 2 new sections, TDS sections. First one is section 194R, which is coming to effect from 1st July 2022, where it is telling if there is any benefit or perquisite given whose value of that benefit, if it is more than 20,000 in a year, then TDS at 10% has to be deducted before providing such benefit or perquisite, guys. Now, who should be the payer? Payer can be any person other than individual and HUF who was not subject to tax audit in the last year. If you are the individual or HUF who was not subject to tax audit in the last year, then for you, TDS deduction is not applicable. You are not a payer as per section 194R. Sir, what if I am an individual or HUF who was subject to tax audit last year? Then this year, if I am giving any benefit or perquisite whose value is more than 20,000, then I have to deduct the TDS, guys. So type of payee will be always the resident. The TDS should be deducted at 10%. And this perquisite or benefit should not be given by employer to employee. If it is given by employer and employee, this will be covered under section 192 only, where TDS on salary will be deducted by employer. So if benefit or perquisite is given by employer to employee, it will be covered under salary to employee, and employer will deduct TDS under section 192 only. So this 194R is covering the benefit or perquisite given by any person to any resident, and the payer can be any person other than employer, because if employer is giving it, it will be covered under 192 only, guys, because salary includes perquisites and benefits. Nah? Yeah. Next, coming to 194. Yes, this is with respect to virtual digital asset. Consideration for transfer of virtual digital asset. If the aggregate value is more than 10,000 in a financial year, then any person who is paying that to any resident, means the person who has transferred it is a resident. Okay. So buyer is any person. So whoever has bought and paying it, 1% of whatever consideration they are paying. Consideration here means sale value, not profit. So whatever consideration the buyer is paying to the seller, he has to deduct 1% of that and give it to the government as TDS. When TDS has to be deducted? At the time of credit of such sum to the account of the resident or at the time of payment? whichever is earlier. Whichever is earlier, guys. Chalo. Now the aggregate limit is, if the sale consideration is more than 10,000, then TDS has to be deducted. But there is an exception for it. If the consideration is payable by a specified person, means if the buyer is a specified person, the aggregate value is not 10,000. They are telling you have to deduct TDS if it is more than 50,000. TDS has to be deducted. And who is that specified person? I have given it to you. For whom 50,000 is the limit. Specified person means an individual or HUF whose accounts are not liable to tax audit under section 44AB in the preceding financial year. And also an individual or HUF who does not have any income under the head PGBP. So if you are covered here, then you are treated as what? Specified person. And only if you are paying more than 50,000 with respect to transfer of virtual digital asset, you have to deduct TDS. If not, don't deduct the TDS. Whereas for any other person, 10,000 is the limit applicable, guys. 10,000 is the limit applicable. Okay. Next, coming to assessment procedure chapter. Chapter 9. So there under section 139 subsection 1, who is supposed to mandatorily file the income tax returns is given, guys. There are 5 scenarios here covered. 1, 2, 3, 4, 5. Who are supposed to file the returns mandatorily. Yes. Now, in addition to this, they have added a new rule, that is rule 12AB, where they have prescribed some more persons who are supposed to mandatorily file the return. And now you will check rule 12AB only if you are not covered under any of these points. If you are already covered under any of these points, then no need to check the rule, guys, because you are supposed to file the return already. Yeah. If you are not covered under any of these points, then we will go and check whether you are covered here or not. So this is the new rule which is added. What is it? We will see. Rule 12AB has been inserted via this notification to prescribe the following other conditions for furnishing the return under section 139 subsection 1. Okay. So there are 4 scenarios covered here. 1, 2, 3, 4. And this is in addition to whatever was already there. This is the new thing now. What is it? Person, the heading you see. Person other than the company and or a firm, because company or a firm is always supposed to file the return irrespective of their income. Whether they have income or loss, they have to file their returns, guys. Okay. Then a person carrying on the business, first category, if his total sales or turnover or gross receipts, as the case may be, from the business exceeds 60 lakh during the relevant previous year, then they have to mandatorily file the return irrespective of whether they have profit or loss. Then if I am carrying on any profession, then the gross receipts from that profession, if it is more than 10 lakh during the relevant previous year, then return filing is mandatory irrespective of whether I am making profit or not. Then coming to the third one, a resident individual who is aged 60 or more, whom we call it as senior citizen or super senior. 60 or more include 70, 80, 90 also. There is no upper limit here. At any time during the relevant previous year. In that case, the aggregate amount of TDS as well as TCS. TDS means deducted on his income, or TCS collected on his income. If it is more than or equal to 50,000 during the relevant previous year, then they have to file the returns, guys. Sir, what in any other case? I am aged, I am a resident individual aged less than 60 years, or I am a non-resident. For me, half of that limit is applicable. If TDS as well as TCS both put together, collected or deducted, is more than or equal to 25,000 during the relevant previous year, then I have to file the returns, mandatory. Okay. Then going to the next point, a person having a savings bank account, the deposit in one or more savings bank account of the person in aggregate is more than or equal to 50 lakhs during the relevant previous year. And if I am having number of savings account, all accounts put together. For example, assume I have 3 savings account. I am depositing 20, 20, 20 in each of this account. So should I file the returns mandatorily? Yes, because aggregate of all this is 60 lakh. I should file the returns mandatorily, guys. I should file the returns mandatorily. Yes. And here whatever is covered is savings bank account. Please be careful. because there is one point covered here where the amount of deposit is more than 1 crore in one or more current accounts. So whatever was covered under fifth point A is current account deposit, which is 1 crore limit, whereas whatever they have covered here is savings bank account. Yeah, so these are the only new provisions, whereas this is whatever we have already covered in our regular class, same thing will remain. Yes, next coming to chapter 10, which talks about alternate minimum tax. So alternate minimum tax will always not be applicable. So only if prescribed deductions is claimed by the assessee, only then it will be applicable. And if it is applicable at what rate? 18.5% on adjusted total income. Yes, there is no change in it, but only if the assessee for whom alternate minimum tax is applicable, if it is a cooperative society, then the rate, AMT rate is 15% and not 18.5%. That is the change, guys. Whereas for all others, it is 18.5%. If for cooperative society, if alternate minimum tax provisions are applicable, then the rate applicable for them is 15% and not 18.5%. And in one more place, there was a change which is same. That is, if you are a unit located in International Financial Service Center, then the AMT rate applicable for you would be 9%, which is given in D point. There is no change in it. It is there as it is, but the new thing is only C point, which I have added here in red color. All other things is as it is. Then the last one here is chapter 12, which talks about assessment, appeals and revision. So there some time things are changed. What is it? I will just read it from the beginning. Time limit for completion of assessment and reassessment, section 153. As per section 153 subsection 1, the time limit for making assessment under section 143.3, that is scrutiny assessment, and 144 best judgment assessment is the time limit to do that is within 21 months from the end of assessment year in which income was first assessable, if it is related to assessment year 17-18 or before that. Okay. Then 18 months from the end of the assessment year in which the income was first assessable, if it is related to assessment year 18-19 and 20-21. Then within 12 months from the end of assessment year in which the income was first assessable with respect to assessment year 19-20, whereas 9 months from the end of assessment year in which the income was first accessible, if it is related to assessment year 21-22 and onwards, guys. So whatever I have highlighted in red color is the changes which you guys have to update. All other time limit and all is same, but only for which assessment year it relates to is different. Yeah. And if the same thing, if it is referred to transfer pricing officer in any of this case, whatever is the time limit, it will be extended by another 12 months. It will be extended by another 12 months, guys. Clear? Yes. So these are all the changes which are applicable for you for income tax for your exams, that is June 2023, guys. Hope this was useful for you. All the best for your preparation as well as exams, guys. Bye. Thank you.